Hey everyone, time for the market review. And lots of things have been happening this week, which is making me reconsider the thesis. I'm kind of confused right now, not no way to say it otherwise. The general idea remains the same, so the thesis remains active. It's just that things are proving to be a lot more bullish than I imagined possible. And we could basically see anything from the like 6 to 8% correction, like going back to the AV up here, to just continuing the bull leg from here. I don't know. I still leaning a bit bearish in the short term. Like the August October window is still likely to be weak, but the bull market is 100% not over. We're gonna see it pump much higher, and I'll explain the whole context here. So first of all, on the semis and memory side, it did peak as liquidity predicted, like we got a pullback here. This recovery yesterday and probably today, it doesn't mean much, and I still think we will get rotation out of this. This is the part of the whole setup that I could definitely be getting wrong. Um, but at the minimum, like the window here until like mid-September into October, could play out. But I don't think the market corrects that much. Like I said, index level pullback should be like at most in the 5 to 8% range moving forward, and we should be getting rotation. And the main problem with this trade, like the momentum trade, is that they need more money. And the prediction was that we will get more dilution, more bond offerings, and so on across the board in many names, especially in like the neo clouds. And this week has proven this to be the case. Like we have a private offering for Nebius, like 4.5 billion. I think they upscaled it to 5 billion because they got more interest. And just now we got, I mean, today we got, or I think yesterday, what did AVGO do? Yeah, it dumped yesterday. So I think this was from yesterday. It dumped because they're doing like 60 billion bond offering. Basically, it's going to be 90 billion. And again, I think this is going to continue throughout the next 6 months. It's going to be a constant liquidity drain on the market, and this is why I believe that semis will not be making new all-time highs. It doesn't mean they dump, uh, although from the liquidity correlation they should be going lower, but we should not be seeing continued all-time highs in semis, and it's going to be the sector that begins underperforming moving forward. Then the second part of the thesis is with commodities going up, and this is going to be the main topic for today. In that we have, let me go to the commodity tab. So we have oil going up, we have gold going up today, not today, this week. Bitcoin also joined the party here. This is copper, zinc, aluminium, and then we have food commodities. This is what soybean futures, rice futures, white sugar. And speaking of that, so for example, we have some various news here, meaning like Ukrainian grain, like I talked about last week, because the Ukrainians are getting hit hard and it's hurting their exports. Basically, this is the worst export since what's this? This is 2022. So they got hit hard, and seaborne exports dropped from like 3 million tons to 0.8 million tons. So this is very weak and concerning. On top of this, the Russians are also getting hit hard by the Ukrainians. And the Russians have defaulted on various export deals that they had because they couldn't deliver on that. So again, food commodities are gonna get hit hard, and the price will increase very likely going into fall when demand also increases. And this is on top of the current issues with weather, Like we have record heat waves across the world basically, and even though production may not necessarily be lower, it's gonna be lower quality for sure. Another thing here on this topic is that we got confirmation. So Indian have imposed a sugar export quota, sorry, sugar import quota, and it it did become realized. This, I mean, I think this was the anticipation of it this week, and this got a bit of a rejection. Let me remove the liquidity one. Go back to the this one, and this is sugar. No, which one is sugar? This one is sugar. And got a bit of a rejection here, but it's becoming reality. Another news on the top on this topic, like cocoa crisis because of bad harvest, and so on. So the whole commodity complex is going to go higher because demand is not getting hit, everything is getting pumped, and mm, there's shortages basically. And we have this is DBA, agriculture ETF, which we sort of have a breakout, not quite there yet as a full breakout. Like basically, we are at this horizontal level. This was a fake out that got rejected. So basically, we're counting this horizontal level as the breakout point. Let me. It's fine here where I put it. So we're still in the almost breakout part of the cycle, but chances are this will stick and it will go higher, and we have like a very long base here, like this is 2 years, and the minimum would be to double this part here. This is not liquid at all. Like I looked into getting some options for it, but it has January 2027 at most, and the spreads were kind of bad, so not really sure what to play with this one. But there are other names you can try out, like the fertilizer names like Moss, CF, stuff like that, which are indirect, or wheat, corn, the ETFs for these specific commodities. Now, the big news of the week was basically Besant, and we had the Treasury announcing the increase of buybacks of long-term bonds, basically doubling the buybacks. And we had a reaction in TLT, or in yields. They pulled back quite big initially, like -2%. And I think this will stick, but it's very easy to get it wrong on this one as well because it depends what they do next. In my opinion, we should be calling this whole trade the debasement trade. So everything I talked about with commodities, basically gold, silver going up like crazy, uh, basic food commodities and everything else, it's a debasement trade. This is the market reacting to the devaluing of the US dollar. DXI reacted quite negatively, -0.88%. I think it goes even lower. Uh, I'll get back to this. So let's talk about Besant. So on the one side, this is capitulation from the perspective. Like we have reached the pain threshold on long-term yields. We got a reaction from them, and remember they were saying that markets stop panicking when politicians begin panicking. So basically, we got a politician begin panicking moment, which is generally very very bullish for whatever comes next. Meaning the belief that we are not anywhere close to the end of the bull market. Like even if we pull back into October, again, its expectation is to be shallow because politicians have panicked. This is a trend break kind of move, like on TLT. It also came with a volume spike, which we haven't seen in some time at these levels. Like we got it here as well, and it moved all the way to the upper trend line. And even if we pull back here, it's very very easy for them to contain this and get it moving in the right direction. In my opinion, all it takes is for Warsh, when he gives next week his Jackson Hole speech, is just to be a bit bearish. Just say, yes, we are willing to. They don't have to do anything. They just have to talk. But if Warsh is not bearish and doesn't take this seriously, again, it's very easy to dump this and make yields go even higher, and just negate what Besant achieved. But if Wars just picks, and again, it's a bit bearish, the positioning will make it go higher because shorts will cover, and so on and so on. So even though we got the pullback yesterday, and the narrative is that it was undone, stop fucking underestimating Besant. We underestimated what Yellen could achieve when she was the Treasury Secretary, and people now are underestimating what Besant can do. Like, the man has been keeping oil down for months. In spite of everything that's been happening, oil is still not anywhere near highs. So we were at 117 at the highs. Oil is 86. This is a very good level for this administration, considering what is happening. Uh, so we should not be underestimating Besant. And all of this is the debasement trade. Basically, their capitulation, they're saying that they move the buybacks. Basically, they're buying short term, they're selling short term bonds, getting money, and with that money, they're buying long term bonds, which is generally a very stupid thing to do. But it doesn't matter if it's stupid. It matters if it works, and it will work. And even though the market on the bond side will be kind of choppy in the next few days, or not necessarily bullish, if Warsh next week says the right things and supports what Business is trying to do, we should be getting another leg up, and it will go higher and higher and higher. The stupidest thing they could do is basically work against each other, which I don't think is plausible. So my expectation is for next week, Warsh will say the right things, the market will react, and we get another leg up in TLT. So this is on that side. On the other side, we have Besant talking stupid shit like blaming Biden again, and stuff like that, which just undermines his own credibility. They need to own this shit more, or at least stop talking about Biden. The more they talk about Biden, the more the market will react negatively, because they cannot take what they say seriously. So they are undermining their own credibility. And if we have this head and shoulders going on, if they keep undermining their own credibility, or are not synced in working together, they will undo what Besant is trying to do. So I don't know what will happen with this one. My main thesis is that this will happen, basically what I drew here. And the minimum, let's say we have this head and shoulders, the minimum would be 84 point, let's just call it 85. Give it a bit of room here, so we go to 85 on TLT. So this is the base case that is likely to happen based on the developments of the past week. Now, I would like to take a few moments to talk about Lord and Jesus crypto and Bitcoin, and show you guys a couple of stuff. We have this lockout rally on Bitcoin. Whenever this has happened in the past, it has always been bullish. Like, it does, and I mean bullish across the board. Bitcoin never ever reacts like this, and then we get bearishness. And generally speaking, this is the type of move we only see in bull markets, and the type of move where Bitcoin moves first and equities follow very, very soon. I'm gonna overlay SPY on top of this. And again, we compare whenever do we get type of lockup rally like this. And there are a couple. I think I marked them, but that doesn't matter. I'll redo it from scratch, and don't need power trend. So first one, this is 2018. We see a lockout rally on Bitcoin. This is 8%, 4%. A rejection here doesn't matter, and then 10%. And as you can see, the rally in Bitcoin started several days before equities bottom. So we have 1, 2, 3, 4 days later, equities bottom, and they began another bull leg. Uh, and we are on day 4 of this type of move. on Bitcoin, day 3 or 4. Let's say day 3. So while we can still generally get index level continuation down for another week or so, I think this is just saying that we're gonna get a liquidity injection very very soon, or or it already happened somewhere in the market and it's not visible quite yet because the data we get from the Fed or from the Fed Treasury or whatever is always delayed by a week or so. So I think what we're seeing in Bitcoin is a squeeze and a signal of impending liquidity injection, which considering we get election coming up soon, they will try to pump the market as we get into election. So this is pointing to, relatively speaking, imminent spike in liquidity, and the market should be reacting very soon and get another bull leg going very quickly. So this is one situation where this happened. Another one was 2020 crash. Once again, similar. Bitcoin bottom much faster than equities. So Bitcoin on March 13th. Equities continued going down quite significantly. So this was what, 260, 260, 270 on SPY on the right here, and it went to 221. So that's a big drop, like 20% lower, maybe even more. But Bitcoin bottomed on the 13th and started going up before equities. Again, a sign that the market was preparing to go higher. Do we have another scenario? No, we have it for the 2022 bull market. No, I think that was it. That was it in the anticipatory move in Bitcoin. So we have these two examples. Now we have a third precedent. And again, it's very hard for me to believe that this will be different. It's never different this time. So this suggests imminent move up in equities. Again, we might get another couple of days of negative movement, but it is showing what it's showing. And another type, this was this. Another comparison is the amplitude of the move. Like we have, whenever we get this type of moves, they always happen in bull markets. And generally, when we are at bottoms and we get this type of lockout rally, again, it's a very bullish sign that we have actually bottom with a volume spike, which we have gotten. So basically, we have the whole displacement trade. We have the most liquidity sensitive asset in the world, which is crypto, reacting positively. It's screaming liquidity injection. There's also this news about Trump saying that the government is considering buying sizable amount of Bitcoin and other cryptocurrencies, which again, it's bullshit, but it is what it is. Yeah, best and stuff doesn't matter. So yes, possibly bearish, but debasement trade in full force. Um, Job warning likely to continue. Like all we need is Warsh to be a bit bearish in his words, not in his actions. Actions don't matter. Even if actions matter, the Fed meeting is probably like in this week here in September, so we are like 4 weeks away from the Fed meeting where they could actually hike. So they could buy a month easily by just saying a few words. So bond yields down, this is the likely trade. Then we have DXI down because debasement trade. We have crypto up and squeezing, doing a lockout rally. We have commodities going up across the board and just part of the debasement trade with gold, with silver, with food, everything. It's all pointing to a liquidity injection that has already happened somewhere in the market, and we will get to see very soon, which is supportive equities. In spite of the liquidity correlation working so far, I think this is about to break down as a trade. And the main benefactors of this is likely going to be the commodity complex, is going to be crypto. Uh, the thesis right now is that because of constant offerings and not buybacks, offerings and bond offerings and share offerings, the AI trade is not going to do very well. And a thesis that I have is that this is going to move into healthcare or biotech, but it remains to be proven. Like I wouldn't be surprised if this pumps another leg higher. Like we could get, I don't know, SND, MU goes to like 2K or something like this. So this is if we get a liquidity injection, as it seems to be happening right now, MU could go to 2K. I'm not even. There's nothing to joke about. Like this is quite plausible. So this is the update on the thesis. Again, like I said, I'm a bit confused and I don't know exactly what's going to happen. Obviously, you guys feel free to chip in and have opinions on this and do your own trades. I'm still processing this and trying to figure out what to play next. So yeah, this is the whole update for today. Have a good one. Bye bye. Hope it helps.